Welcome to today's market report. European stock markets are seen opening higher on Monday, rebounding after last week's sell-off as retail-inspired pressure on hedge funds lifts with silver in demand. DAX futures contract in Germany traded 0.8% higher, CAC 40 climbed 0.7%, FTSE 100 rose 0.7%. Global stocks posted their biggest weekly drop in around 3 months last week, partly on the turmoil fueled by retail traders organizing over online forums to take on hedge funds by buying heavily shorted stocks such as GameStop and AMC Entertainment. This pressure appears to have lifted to a degree on Monday as the focus of the newly empowered day traders now seems to have shifted towards silver. The metal has jumped 6% to a 6-month high, possibly limiting the need for distressed selling by these funds. This positive start to the European day comes despite 2 PMI releases from China showing economic activity slowed in January as restrictions took a toll in some regions. Manufacturing PMI data is scheduled for release in Europe later on Monday, and this should detail a similar loss in economic momentum for this region as coronavirus lockdowns bite. German retail sales slumped at 9.6% on the month in December. There was some positive news on the UK vaccination program over the weekend, as government records showed a record number of COVID-19 vaccines were administered on Saturday, bringing the total number of people to have received first dose to just short of 9 million. The rollout of vaccines throughout most EU countries has been less impressive, prompting a democratic spat late last week when the EU Commission announced it would impose export controls on vaccines, potentially creating a border between Northern Ireland, part of the UK, and EU member Ireland. This decision was quickly reversed, but is indicative of the mistrust between the two sides after the tempestuous, long-running Brexit talks. Elsewhere, President Joe Biden's $1.9 trillion COVID relief package is still trying to make it through Congress and could suffer further delays after a group of Republican senators sent the president a letter on Sunday urging him to consider a scaled-down proposal. Back in Europe, results from the likes of Julius Baer and Banco de Sabadell will be in focus, as well as numbers from low-cost airline Ryanair. Oil major BP will also be in the spotlight after it agreed a 20% stake in its Oman interest for $2.6 billion. Oil prices edged higher on Monday, boosted by virus infections falling in some areas, more vaccines proving successful in trials, as well as output cuts by Saudi Arabia. Crude futures traded 0.3% higher at $52.36 per barrel. Brent rose 0.6% to $55.33 per barrel. Gold futures rose 0.8% to $1,864.70 per ounce. On the FX front, the GBPUSD pair has outstripped all levels back to the first half of 2018 as the pound added slightly to its gains of the past 4 months last week. The pound faces a considerable technical test ahead as it approaches substantial resistance at 137.70. The strength of this line probably ensures several technical attempts before success unless it is negated by the meaningful fundamental development. The Bank of England policy vote will produce no change, and though markets will look to Governor Andrew Bailey for direction, he is unlikely to provide any more indication than his colleague in Washington did. The trend is higher, but could be blunted if the dollar regains a stronger bid from the risk-averse trade or an improved domestic economy. The several closing rates over the past week around 137.40 are references to the resistance at 137.70 and above, rather than a block of thereon. The rising channels are intact, and the upper border of the inner and steeper formation enters the resistance bands and is protected by them. It is likely that a move higher from here will need a positive fundamental or economic development. Euro-dollar is sidelined above 121 ahead of the euro area final manufacturing PMI reports. The euro traded between 120.92 and 121.55 before Friday's closing. French Finance Minister Bruno Le Maire on Monday said a full lockdown would cost the French economy around €15 billion a month. A new COVID lockdown can only be the last possible resort. The dollar index was up 0.1% at 90.575. Dollar yen was at 104.72. This is today's market news. Thanks for listening. We'll see you next time.